2024 marked a gradual recovery in European real estate, with lower interest rates easing pressure on the sector and reviving lackluster activity over recent years. 2025 looks set to continue that trend, even as sluggish growth and geopolitical uncertainty remains. Real estate firm CBRE has dubbed 2025 a pivotal year for the sector, forecasting a 15% uptick in investment activity, with market watchers eyeing further recovery across three key property segments. Office take-up looks set to rise across Europe next year as more workers return to the office, pushing leasing levels closer to historic averages. Recovery in the sector will be polarized, however, with rents and valuations diverging between the best and the rest. Primary or Grade A office supply will remain constrained and in high demand, while interest in secondary assets will remain low. The residential market is also poised for greater activity next year, as borrowing costs fall further. Average asking prices are now expected to rise 4% by the end of 2025, an uptick on recent years, but in line with long-term averages. Meanwhile, rents will remain elevated as supply constraints persist. Among prime real estate, price growth is set to continue too, maintaining Europe's status as a global wealth hub. Stockholm, Marbella and Madrid are seen leading that charge, recording price growth of more than 5%, while London and Paris remain luxury leading markets, despite political flux and a clampdown on the uber-wealthy. Elsewhere, demand for operational real estate, or beds and sheds, will remain strong, with particular opportunities in logistics hubs, student accommodation and hospitality. But analysts warn that understanding structural trends such as digitization and demographic shifts will be key to differentiating between the winners and the losers. Investors will also be closely watching a few key trends that could impact the real estate market. Incoming sustainability targets in the UK and Europe will require strong alignment among occupiers, landlords, investors and lenders, while new construction targets could create more opportunities in key markets. Meanwhile, artificial intelligence is set to become more critical to the sector, with 85% of respondents to a 2024 PwC survey saying they expect AI to have some or a large impact on all areas of real estate over the next 5 years. I'm Gilchrist for CNBC Business News.